With so many options today, finding the perfect real estate services can be difficult, but it really doesn't have to be. There are some key questions you can ask to really narrow your choices down. Today's local real estate expert will share some insider tips on what to look for when searching for the right service for your situation.
I wanted to talk about this because it was a statement that's controversial, and it comes from a guy I really respect, Grant Cardone. If you're in sales at all, you should follow this guy. He's a master of selling. But here's what he said: buying a house is for suckers. Should you own a home? Unless you have 20 million bucks in the bank in cash, you have no business buying a home. And I vehemently disagree with Grant. His feeling is a home is not an investment because it does not pay you every month. And just because something isn't a cash flow investment doesn't mean it won't bring great capital gains or great increases in value. So I want to walk through this and maybe talk about his perspective. Again, I have great respect for this guy, but you need to know that his end game in his life is to own something between 20 and 30,000 rental doors, and he does acquire large apartment complexes, and he wants you to rent from him. And so I would say that renting is an investment either. And so if I'm paying thing to somebody so I can live somewhere. And so let's talk about harnessing that expense flow going out of your budget and generate something good for you for your long-term savings and investment. And I think this is particularly poignant for the millennials among us. And so this is a piece that we take out of our first-time home buyer seminar, and I'd like to just focus on this little short snippet. This won't be about 5 minutes or so. So let's just say, for example, that you utilized leverage to buy a home. And leverage is a concept of taking a little bit of your money and leveraging it using someone else's money to control an investment. So you can gather all of the gains. You also have to shoulder all the losses, and that's what causes problems in stock market accounts, and that's a discussion for another day. But in real estate, leverage can turn out really well. And for you, buying a single-family home for you to live in and occupy, well, that's what we're talking about, leverage here. So let's just say, for the sake of round numbers, you're buying a house that's $100,000, and don't scoff at that. There's probably not a lot of $100,000 homes around here. But let's just say you do. And let's say you use a great low money down program like the FHA, government insured fantastics, 3.5% down. So that could be a gift. So you could actually come into this with zero money in the deal. But let's just make the numbers fair. You're able to accumulate $3,500 and put down as the investment. We're gonna make the seller, as part of your purchase contract, we'll have the seller pay all the other closing costs and expenses that are associated with your mortgage, like title insurance and the appraisal and lender fees, all that stuff. So let's just say that you put down $3,500, and then you own this property for 3 years, and then you sell it for moderate 6% annual gains at $120,000, and that is modest. If we look back over the history of real estate, 6% would be modest. A lot of real estate guys, I think, kind of think they make somewhere between 8 and 10% on their real estate stuff. So let's just say 6%, and that's compounding a year. In 3 years, you're selling that thing for $120,000. Someone's handing you a fistful of hundreds. So let's look at the numbers. After you pay off your $100,000 mortgage, and it would have decreased a little bit in principal pay down, but keeping the numbers round, $20,000 profit. Let's recoup your $3,500 that seed money that you put in to control that investment. You're left with $16,500. You've almost 5 times your money. And I think if we left your seed capital in there, which is the way they look at tripling or doubling money, that money is in the equation. But even if we take it out, 4.71 times your money, or almost 5 times it. Now, I don't know where you go and find any investment that's going to give you that kind of return, not to mention something that's safe as a tangible asset like a home you're going to live in. It is crazy safe. In fact, not crazy safe. But if we look at that as an annual return, that's 157% return annually. And of course, there's other community benefits to owning homes. Well, people take care of homes, people put down roots. It's great for the stability of children, and on and on and on. But we're just talking about the investment here. So because it's a primary residence, something that you live in, you can do this every 3 years and have no capital gains. Now, tax treatment could change, and so take a look at what it is currently when you watch this video. You can always check with a tax advisor. I'm not a tax advisor. But man, no capital gains at this point, not to mention the yearly tax deductions that you get for your mortgage interest. So you go, when you switch to being a homeowner, you go from being a standard deduction guy on your income taxes or gal to being able to itemize and write that off. And mortgage interest is going to be a very, very high percent, 90-95% or so of your payment is interest that you're going to now be able to tax deduct and put some more money in your pocket to really make this even more of a minimized expense. And we could track all that all the way through, but that's not for today. That's for another day.
Wow, that's pretty incredible, isn't it? Now you have some great tips to help you find just the right professional that'll help you along. Are you curious to know more? Today's expert can be reached at the number on your screen. Until next time.